What's up, Model FAs? David DeCelle here, CEO of Model FA and your host of the Model FA podcast. And we are joined today by Craig Butler, who is the Chief Growth Officer and Managing Partner over at True Independence. And I'm particularly excited about this conversation because Craig has a pretty cool background and he also is a part of something really special over at True Independence, and we're going to unpack that today. We'll have a bit of a business development and sales oriented approach to the business and learn how Craig supports advisors to improve in both of those areas. But with that said, Craig, welcome to the show.
Hey, glad to be here. Thanks for having me and look forward to a great exchange here.
Well, it's funny that you say exchange. We actually launched a new service that's called the Exchange. So you didn't even realize you gave us a plug just then, Craig, but you did.
Glad to help. Glad to
Uh,
help.
So so thank you for that. But
Oh, sure.
with that said, for all of our listeners, let's start with where you are, and then I want to take them back. So talk to us just briefly about True. Like, what's the size of the firm? What's your role as the chief growth officer? And then I'll interject, but just real quick overview of True to help set the stage.
Yeah, some of my narrative will be historical in nature, only because we joined forces with Sanctuary Wealth here in the last 6 months, which has been a real blessing and um, just a spark that we didn't expect with this union. They work on the shared ADV side. We work with the advisors who want their own ADV. So to have that comprehensive offering through our combined entity has been amazing so far. But historically, I, as a chief growth officer, responsible for business development, but also, which is in a traditional sense, right? But also helping our advisors grow as well. Our growth is if our advisors grow, we grow. If we bring on new business and add new advisors to our partnership, if you will, then we grow that way as well. They're both equally important. I would say that our clients would say their growth is more important if they had to prioritize. So we're mindful of that. But they're both equally important to us in the sense that we're trying to build something here, and we're trying to build something extraordinary, and we're trying to build something that has a pronounced delta vis-a-vis what you're seeing currently in the market, and new things are coming on board all the time, actually creating a bit of a crowded field, in my opinion. So how to differentiate in that environment is important to be able to execute on truthfully, because it gets a little convoluted out there. And how do you make yourself look and feel different? Much like the advisors themselves have. When you look at some of the websites, they sound more similar, look more similar than dissimilar. They're all talking about the blocking and tackling of being a wealth advisor or an asset manager. But how do you really stand out vis-a-vis your competition as an advisory firm, right? So I have some ideas on that, but we could talk about that later. So it's really been, growth oriented, help us grow through organic growth, but also helping our advisors grow.
Awesome. And then just for frankly, credibility purposes, and feel free to brag for a moment because I know you guys have built something pretty significant. What are we looking at in terms of assets under management and amount of advisors, employees, of the firm? Like what's the head count underneath the True umbrella?
Well, there's the true side and the sanctuary side. The true side has about 40 associates, not including the management team. And then we have 32, I think, existing RAA partner clients that we call. And that takes us to about roughly 12 billion. If you add that to the sanctuary side, they have 90 clients. And so collectively, we're about 45 billion, I think, is the last count. So with 120 advisors, either IARs or independent RAAs. So that gives you some context of our size currently.
Awesome. So that's where you are. Help with the folks tuning in to this episode. How'd you how'd you get started in this career? Like I doubt that you came
Yeah,
out of the womb, so to speak, and were a CGO. So what were some of the
yeah.
steps that got you into the industry?
Really, I've been in different industries in the past. It's my 29th year being in the REA industry. I joined Fidelity Investments in 1995 as a business development professional. And I was there for almost 19 years. And what I noted about this space, first of all, I fell in love with it right away. I just love this niche in the financial services marketplace. And I believe today, as well as back then, it's still at some level the best kept secret as far as what options are available to the investing public. The fiduciary model being fully independent. We understand it because we're in the space, it's our profession, but the market at large, the end client side, not as much. So it's still at some level the best kept secret. But started in 95, and what I noted there was a lot of things missing for independence. For example, Fidelity, like Schwab, Goldman, some of the other great custodians, Pershing out there, they have certain things they bring to the table: custody, safekeeping of the assets, excess insurance, trading, banking services, right? Those are probably the heartbeat of what they bring to the table. They have capital markets and other kinds of things that also you could, I believe, are important. But when it comes to owning a business, who does my compliance? Well, they don't do that. Who does my operations? Well, they don't do that. Well, who helps with website marketing? Well, they don't do that. Right. So all the operational things that someone who was desiring to go independent are actually missing. And I say this often. I said I have an MBA, and it was a great program I went through, but it did not equip me to be the CEO of a business, if I'm being completely honest. Now, some of the programs today are a little bit more nichey than when I went through business school. But even then, what do you really know? I learned really pretty much everything I know about business organically by being in the field, by being in management and how do you go from an employee one day and be a successful, thriving business owner the next? That's a pretty big chasm between the two.
Hmm.
So what intrigued me was this part that was actually missing from the custodians. And so I collectively will call that a business platform. So having these other abilities is important. And we would do our best to piecemeal it. Like we'd bring in a third party marketing firm and a third party IT firm and a third party that would talk about compliance. And so you could kind of piece it together at some level, but there was never really thriving and cogent communication among those third parties. So the idea of having one party, one entity that can cover all other aspects of business ownership was intriguing to me personally. And so that's what got me sort of into this platform space. So after 19 years at Fidelity, I actually got an opportunity. I wasn't looking for it, but I got an opportunity to go build a platform. And I teamed up with a family office who funded it. It was a really rich experience, and realized, wow, I love this side of the equation, as it were, being on that business service side. That's the part that inherently has been missing. That's the part that creates without it creates fear and trepidation that can't really be addressed. You have the truly hardcore entrepreneurs that will fight through that fear and trepidation, right? But the majority of people don't have that wiring. So I call it the cautious entrepreneur. Someone's like, I'm drawn to it, and
Hmm.
if I could get some guidance and assistance and partner with someone who can help me with all these unknowns, I think I could do it. And that's really what this represents.
Well, it's interesting because I know you've helped, like, if I'm not mistaken, hundreds of folks throughout your career go from like the wirehouse or broker dealer space into the independent space. And I came from the broker dealer space. And what I realized when I left is whatever gripes I had against that setup, and I think it's easy to have gripes with, broker dealers and wirehouses, but the reality is they take care of a lot of stuff for you. And then when it's time to go out on your own, you're like, wait a second. I don't know how to do that because I never had to do that, or I don't know where to go. So that kind of leads me to my next question, and I want to get more specific over time during this episode. But you had made mention, I made sure to take note of this because I wanted to bring it up in today's call, but you had said, and I quote, I believe True has the best offering, period. Walk me through what the offering is, why someone would want to join True, because my guess is that a lot of the problems that you just alluded to that folks have when they become more entrepreneurial, you've worked hard to put things in place to help ease that burden and help solve. So walk us through what True's offering actually is.
Happy to. So it really is bifurcated into two segments, right? There's the business platform side, right? That part that replicates what you were just talking about. That air cover that, my computer won't work. I had somebody to call. I had a compliance question. I had somebody to call. I just, you had all these services and you could just focus on being an advisor and build your practice from there. So we replicated that. So we have a finance. We have finance and accounting. So it's a solid offering. Most advisory firms have a simple bookkeeping kind of process where they'll do the P&L. We generate full statements. You get accounting guidance. So we can talk about taxes, when to do certain expenses. As I said, full generation of your financial reports, put you in a position to take all this data and give it to your most likely your business accountant to do your tax returns. But we make you mindful of what you're managing from a pure financial side. No, just don't get that anywhere. So that's new to advisors. Compliance, we're literally on your named compliance officer, meaning we're on the ADV. So when you get audited, I like to say it's a we thing, not a you thing, or it's a true thing, not a you thing. So, we take on that burden of risk, right? So we have all the, motivation in the world to keep you compliant because we don't find ourselves in trouble. I don't know of any other firm that does that out there. Most people would not want to embrace that kind of risk. That's reputation risk. It's regulatory risk. It could end up being financial risk, right? So that's very unique. That's one of the things that is probably the most intimidating for advisors that are thinking or considering going independent is this idea of compliance. They've been beaten over the head over it for so long. And historically, what I have observed pretty regularly is, wirehouses will take bad policy and merge it with, regulatory kinds of things and, blame bad policy on the regulators. It's pretty consistent actually across most of the wirehouses. So we know what's real, what's not. We know what's compliant, what's not. If it's legal, ethical, and within regulatory scope, we think we bless it. You want a TV show or you want a radio show, you can do it, right? If you want to start a hedge fund or a private equity fund, we can support it. Not all of our clients do that, but some of our clients are interested in that, and some of our clients are doing that. So that is so refreshing. The shackles have come off. So not only do we, um, take on the burden of the compliance, but we actually allow you to do more than you ever imagined in an independent environment as it relates to compliance. Then operations to support, setting up accounts, setting up billing, running billing reports, submitting them to you to be reviewed, off to the custodian to be paid. We have marketing support so we can help you. If it's a startup, then it's full branding exercises, right? So from naming, branding, website design, narratives, what do you want to say? All that goes into that, we help you with. Then it's IT. IT is really important today. So we support you from, I'll call it a pure office technology, the standard stuff that any business would probably use, but then also your fintech. So we're your first line of defense when it comes to your fintech choices. And you do get choice here. And today, with all the regulatory emphasis on keeping client data secure and cybersecurity and all that. To have that bifurcated to two different parties is actually pretty risky today. With us, again, we're one team, so we're always communicating together. So full IT support. And then relationship management. So once you transferred your assets and your transition is done and we'll go through what we call stabilization, then you start looking at your business for the first time in a way that in a way that enables you to think about the future now, what your next steps are to grow your business, right? What kind of unique things you'll do for your clients, et cetera. So those are some of the core components. We also have a product called TrueView, which is our version of Advise On, which is pretty cool because it does some unique things. It allows us to communicate with you through that system. It's a system where you're not bifurcated, not really bifurcated, but you're not using multiple APIs to connect to multiple third-party solutions. It's one solution. It's a single source code, so it's fully integrated by design. So there is no API in the product itself. They do have APIs to things like financial, excuse me, a bit of cold air,
You're
financial
good.
planning and the rest. So that's once you kind of take a deep dive on that, that's actually pretty unique. We do support other portfolio management and accounting systems though. So we are a platform that gives advisors choice. So I think those are some of the key things that we do from a business platform perspective. From a client perspective, growth is everything, right? So how do I grow this thing? So we'll do deep dive. One of the things we spend a lot of time on for our clients is doing a SWOT analysis. So much great information and awareness is actually created by going through that process. And everybody's heard of a SWOT. Maybe you've been through one before, but ours is very deep dive. So it's not just an hour exercise, like a lot of the custodians kind of position. No, ours is multiple sessions and multiple hours, and generally with the entire management team. So from there, we glean enough information to create a vibrant growth strategy, right? So now we know what your strengths and weaknesses are. Certainly, we want to leverage your strengths, minimize weaknesses. And that is something that is way overlooked, I think, for most advisory firms. As far as competition, most advisor firms don't even know who the competition is. Like, so if someone was shopping for a new advisor and you're in a large market and you're not aware of your competition, how do you really position your strengths, right? You got to know who you are and who you're not. So the intel that comes from that exercise, along with I guess the confidence that comes out of that, like what your niche is, what you're good at. Let's discover that. Let's make sure we understand it, and then let's create ways to maybe change our narrative in the marketplace to identify uniquely where we can identify. And then we build a growth plan or a strategic business plan. Growth plan is actually part of that, and then we'll help them execute. There's a lot of people who will help at some level, and at some, not to the depth that I think we do, but actually holding the advisor accountable is also pretty important because, we get excited about some plans, some exercises that can move our business forward, but if we're not held accountable, often we can get sidetracked. We're not fully committed. There's no accountability to anybody else, right? We make our advisors accountable if they want to be. If they don't want to be, that's a little bit of a red flag, truthfully, because we're trying to help you execute a plan that's going to, move business forward. So we spend time there. We look at their team. I personally am a certified Berkman consultant, so I work with teams which we call high performing teamwork. Everybody has a team that has some level of dysfunction. There may be a gap in the organizational strength that you're missing that you just don't have awareness. How we communicate with one another, understanding unique personality, understanding what our unique gifting is, and looking for alignment between the organizational work that we do and our gifting. That's very, very important. How to deal with conflict. Conflict is daily. Usually it's small, but sometimes it's not small. So how do we deal with conflict? Most people try to either hide from it or run from it, just truthfully. So we work with teams because we believe you can't have a great business without having a great team. And I've been doing that for probably 18 years. I absolutely love it. So it's just one of my interests, and I think it's a gift of my own. So I don't know anybody in the marketplace that's doing teamwork like we're doing. I don't know anybody that's doing teamwork at all, truthfully. If they're doing it, they're finding a third party coach or somebody who's qualified and skilled to do it. But we actually can bring that to the table. So I'll pause. That was a mouthful, but
Well, there's a number of things that you made mention of that I want to emphasize in no particular order, but there are a few things that you made mention of that really stood out to me. Number one is it sounds like from a compliance standpoint, you guys serve, and this is more so just some linguistics and play on words, but you're more so um, compliance consultants as opposed to compliance officers. And what I mean by that is a compliance consultant figures out a way alongside you to allow you to do what you want to do. A compliance officer, may just say no and not want to figure it out. And it sounds like you guys position yourselves as, that consultant like relationship of, hey, okay, you want to do that. Let's figure out how we can actually do that legally and ethically. So I really like that. Number two, you made mention that from a marketing standpoint, there's a lot of folks who are leaving a wirehouse or a broker dealer. They don't have their own brand and they don't know which way is up or where to start. So the fact that you're able to help from a name, a branding, a website, like soup to nuts, you're able to help with all that is wonderful. And then also, helping not just put together a plan alongside them, but also help execute that plan is really good. And there's actually a book over here. I'll grab it quick. Um, if you haven't read it yet, it's directly in alignment with some of the stuff that you were sharing from a business planning and SWOT analysis standpoint. It's called Choose Your Enemies Wisely by Patrick Bet David. I'm in the midst of rereading it now, actually. And there was a lot of stuff that you shared around the business planning stuff that made me think of that book. So if you're looking for something else to read, feel free to check it
thank
out.
you. Yeah,
Um,
great
and
recommendation.
where I want to take this next part of our conversation is you've mentioned quite a bit businesses and the businesses that you support, aka the financial advisor's business. Um, to you, what's the difference between a practice and a business? Because
Oh,
my
that's
because my
wow.
theory, just to kick it off, is
Wow. Wow.
that advisors get into the business for the three I's that we were all sold on: impact, income, and independence, right? And then we have this oh crap moment at some point in our career where there's an inflection point where it's like, oh man, I actually have a business now. And I didn't necessarily sign up for this. So walk me through your opinion around what the difference is between a practice and the business.
Okay, so I absolutely love that question. And truthfully, it's the first time I've gotten it. And it's a passionate question, and I have an equally passionate answer that's a little bit multifaceted. But so during my custody days, after calling on hundreds and hundreds of advisory firms over the years, these are my statistics, but I stand by them and no one has refuted them yet. And I'm being generous, but 90% of existing independent RIAs, I believe, are practices. And the remaining 10%, and it's probably less, but we'll call it 10%, are what I'll call real businesses. So to your question, what is the difference? The way I'll sum it up, and I'll go into detail, but the business has the right people in the right seats doing the right things. All right. A practitioner generally is wearing multiple hats, is not good at is good at being an advisor and might have some gifting and something else, but the rest of it, the gifting is not there, right? So they're diluted as far as their energy they're being spent. They're not working in their gift lane or their gifting, as it were. And so not everybody gets all those gifts of running a business, right? That's why we have people who are really good at finance. That's very good people at compliance, at different mentalities, at different interests, right? So right people in the right seats doing the right things. Okay, well, what are the right people? Well, it's having a team that is, again, working in their lane. They're working within their gifting. They're working within their talent. They're working within the interests. They love the work they do. I personally am not interested in compliance. Our chief compliance officer, we have two of them. They love it. They love it. They can't read the next thing that's coming out and what the next debate will be and what the SEC may be talking about and whatever. It's like I have no interest in that, and I'm glad they are passionate about it. And guess what? They're really good chief compliance officers, right? Most practices, the owner is listed on the ADVs, the chief compliance officer, even though they know very little about it. So does that make sense? No, it doesn't make sense. Same thing with other parts of the business, whether it's operations, whether it's marketing, whatever it might be. So the biggest part in the business too is doing the right things. So, for example, we're in mid-November, right? Planning for next year. A business will do planning. They'll create budgets for 2025. They'll have strategic business plan in place. They'll have business goals to meet, right? And they'll have tacticals to support those goals. So they'll help implement that strategy. Those are the kinds of activities that a business will do. So generally these teams will do offsites, and it's all about planning for next year. During those offsites, they'll review their numbers for this year. They'll compare them to their goals for this year. They'll see what's working, what's not working, right? They kind of unpack and they look at their business carefully and discern what steps are necessary for the next 12 months. Things change, environments change. You may have a change in staff, right? There's all kinds of things that you need to bring to bear when you think about planning. I think that by itself is one of the most telling behaviors of business versus a practice. So it's not rocket science in the sense that you have to. It's a lofty kind of thing to achieve. It's just being mindful what it takes to be a business owner. And again, when you're talking about the breakaway market, I mean, I was an employee at Merrill Lynch or Morgan or wherever it might have been, and today I own a business. But what do I really know about really running and operating a business? And the answer is, very little. So one of the things that True brings to the table is we're going to help you become the best CEO or joint CEOs with your partners, whatever it looks like, how you're organized, right? We're going to help you with that. So I think that sort of big picture wise, at least, is a delta between a practice and a business. Why do you want a business? Because you have enterprise value, right? You know what the M&A market looks like, right? There's used to be 10 buyers for every existing independent RIA. There are now 30, right? The roll-up market is monstrous. The valuations of these deals is crazy, right? So you want to optimize your business. And there's probably 70 to 80 different variables where you could really just literally grade your business, how well you're doing. And you could grade it from 1 to 10. You can grade it by letters, whatever. Generally, it's some sort of a numerical component to your assessment. But being mindful of the things that expand your enterprise value, be mind things that kind of hurt your enterprise value. It's kind of like credit, right? You get a lot of hard credit hits. It hits your credit number. It goes down, right? We're mindful of it. You got to manage your credit. Well, same thing with a business. Not a perfect analogy, but you have to be intentional of knowing what's driving the value of our business. What are the things that we need to address? What are our KPIs that need to be mindful, and what are KPIs of similar sized firms that have what do their KPIs look like? on various important business metrics. So those are the things you think about. Those are the things you got to be mindful of. Those are the things you got to pay attention to. And those things require intentionality and measurement. So that's a business mindset, but it's going to pay off in the end because the business valuation you're going to grow faster. One other thing, we've been through some down markets. Obviously, they're very painful, but I have never met a business RIA that we would call business yet that had a negative year in a really down market. That's like, how do you do that? Well, you grow through it, right? You grow through it. So net, if you can grow through it and not actually be down 20% because the market's down 20%, you're probably looking at a business. So businesses are worth pursuing. Operating and managing your enterprise as a business makes the greatest sense in the world. And truthfully, at the end of the day, it makes your professional journey all the much more richer because you're learning, you're becoming a student of the game, and it's kind of like a puzzle. It's fun to put puzzles together and find unique solutions to with the objective of creating really great outcomes. So I'll pause.
So if I'm sitting here as an advisor and I'm like, all right, Craig, you're calling me out. I definitely have a practice. And I really like the idea of having a business, but I have no idea where to start. How do I go from wearing multiple hats to having something that has enterprise value? So, if there's an advisor listening to this, which there are plenty that find themselves in the stage of owning a practice and not running a business, what are the two or three things that they could do today to get closer to running a business?
That's another very good question. I would say, people instinctively probably know already. They can ask themselves without any objective or even subjective, way of viewing their business. If you are wearing more than three hats, you're probably a practitioner. Okay. If you spend upwards to 40% working in the business versus on the business, you're probably a practitioner. If you're not doing offsite planning for next year and looking at this year's metrics and KPIs and looking at goals and objectives that are in writing for next year, you're probably a practitioner, right? So what do you need to do? The first thing you do, you probably want to just fess up that you probably do own a practice. Secondly, you want to take stock of what's the value of your business currently. So there's a number of ways. True has a way that we can do a business valuation to give you some sense of where you would be graded as far as doing the right things to have be a true business. And then by going through those evaluations, it will create clarity and illuminate areas that you're weak in. So sometimes an assessment like that will bring the hard cold reality that wow, I'm really far off to really running and operating a business. I think those would be some key elements that one could pursue to just get a sense of, well, what do I have here? Do I have a practice? Do I have a business? And if you desire to have a business, then seek help. First thing you want to do is either true or maybe there's other entities out there that can just weigh in and look at what you're doing, look at your team, look at the responsibilities of the people on the team. What are they doing? Look if there's a gap in the talent that you need for a certain role. Look at your business metrics and look at your goals. How well are you executing on those? See if there's some obvious things to us that you are doing wrong, right? Or not doing at all, which could be considered doing wrong, right? So just look at some gaps that uh, that would uh, illuminate again, some of the things that are not being done that require attention. It'd be hard to do it all on your own. You really need some guidance and support, and through a third party, I think. And we do this all the time, but there's other people that do it. This give you some sort of a grade as far as business versus practice, and that will really illuminate and tell you what is and really what isn't from a objective versus a subjective perspective, and then work off of the outcomes for something like that.
So I have a friend and client in the industry where they practitioned their way to 2 billion in assets. But they are very, very much financial advisors and not business owners. And they would also be the first person to tell you that. And they brought on a CEO last year so they could stay and be advisors doing what they love to
Hmm.
do, but had
Hmm.
a CEO brought in, and lo and behold, a year later, they're a hair under 3 billion, like just like that. And they would tell you that we should have done this at a billion, we should have done this at half a billion, but it took them some time to frankly suppress their egos and remove themselves from the day to day for long enough to admit that they had a quote unquote proverbial problem and spend the time necessary to fix that problem. So that scenario in mind, they waited until 2 billion in assets to bring someone in. At what point or what size should someone who has a practice either become a business owner and run the business or bring someone in to do that if that advisor does not want to do that? Is there like a inflection point of 50 million, 500 million, $1 billion? Like what is that inflection point? Or if it's better answered not through an AUM number, but through some other way, I would just like to get your opinion on that.
Yeah, if you wanted me to peg it on an AUM, I would say, probably that 500 million, where you're bringing in a CEO that's well paid to look at the business. You could start earlier, depending on what you want to do, if you hired a CEO, you're going to eventually, not eventually, well, within a quick period of time, look at some sort of return on investment, certainly in the first 12 months. So it sounds like this team that you had shared got a really good ROI on hiring a professional CEO or someone who can manage and work and operate as a CEO. Not all CEOs are the same, by the way, and one that has some level of experience in this world would probably be optimal. But to answer your question, I think it just depends on the abilities of the financial advisors that are leading the way, what they want to do, understanding and having the awareness that you know, creating great experiences for clients and the ability to sell their services to prospects is the best use of their time. Anything in the weeds that is really not revenue producing is probably an optimal role for them, right? So it could be as early as 300. There's things that an advisor can do to make steps toward the eventual commitment to hire a senior level person who can manage all aspects of the business. And it really depends on what they want to do. I mean, some people know they're spending way too much time working in the business, right? I think I liken the value of the hourly wage of an advisor from 500 to $1,000 an hour, and why anybody would sign up for doing 20 $25 an hour work when you can make $500 to $1,000, 500 to 1,000. I don't know. Nobody signs up for that intentionally. They just find themselves there over time, and they wake up one day and they feel super exhausted, and they're wondering what they're doing, and feeling like they're on an island, and feeling defeated, and on and on and on. That's not a outcome that you have to accept, right? So um, it just really depends on what they want, what they're trying to do. You mentioned egos. Yeah, you got to check your ego at the door and really look at this objectively. What are you trying to accomplish, right? And so this within a year they grow by 50%. That's impressive by any measure, right? um I would love to learn more exactly what they did as far as tactical kinds of things and strategy, of course, because I'm intrigued by that. But had turning it could have been as simple as just turning all the operational stuff and giving it to someone who's responsible for it. Say, you know what, uh, David, take it. Just take all this. Let us be advisors. It could have been that simple, truthfully. But nonetheless, it shows you how important it really is to offload those things that are boat anchors, so you can be free to do the things you love to do.
I think even on a smaller scale, if I'm listening to this and I'm like, man, 300 million, 500 million, I'm sitting here at 30 million or 50 million. Um, what I would say is that even something as, you know, simple, maybe not easy, but simple in terms of the framework, like implementing EOS from the book Traction into your business, even if you're a solopreneur or have a staff person, just starting to do things like that to act like a business owner allows you to make the transition from practitioner to business owner that much easier by starting sooner rather than later, even with something as simple as EOS.
I agree with that. EOS, generally is more of we use it ourselves, by the way, so we're believers in it. It's our once a week meeting that allows all of us to communicate effectively and get a sense of all the moving parts of the business because everybody's running hard within their own lane, right? Their area of responsibility. So I believe in it. I think maybe taking some core sort of basic one-on-one stuff like what KPIs am I going to track? What are my objectives for 2025? How well did I do this year? What were my net flows? Right? Take the market action out of it, right? That's not fair. Take the market action. What is my growth net of market action, for example, right? If I could hire one more person, what would that person be? What would they do to help me, drive my business forward? Being mindful of that, because if you're mindful of it, then you start paying attention to the talent that's out there that you never know. Somebody would come into your realm of existence, and all of a sudden you realize, hey, Linda's would be perfect for this, or Bill would be perfect for this. I think both Schwab and Fidelity in particular publish there's not best practices, but the benchmark studies, excuse me,
Hmm.
and knowing what similar firms are doing, grading yourself, finding out what quartile do you fit in, as far as firms of similar growth. So you have some sense of at least, if you're a 30, 40, $50 million firm, how do I compare to other firms of similar size? I think even having awareness of that is huge, right?
Hmm.
Because if let's just say you find yourself in the bottom quartile, it's be like, wow, what am I not doing right here? Right. I want to at least get into the third quartile, or I want to make some changes, material changes to improve what I'm doing here. So, but you have to have mindfulness. You got to have interest. You got to be motivated, right? You have to have desire. All those things probably sound more similar than dissimilar, but you have to have you have to think like a business person, even if it's simple business. Business is business. What are the things one thing you can do is I'm a financial advisor. And I work with clients and I'm looking for new prospects all the time. But what am I doing about looking at this thing holistically as a business, right? To put the clients aside, what am I doing or what am I looking at or evaluating as far as the business metrics itself? That would be a great, I think, exercise for a lot of advisors to engage in. Because I honestly, a lot of times the practice runs the advisor doesn't run the practice. And they just don't have the bandwidth and intentionality to, put everything on pause and just look at business, just the business side of things. Um, so,
And
and yeah, go ahead.
I was just gonna say, and it doesn't need to be, like at the beginning stages, set aside 30 or 60 minutes a week to just remove yourself from the business to work on it, right? It doesn't have to be groundbreaking.
I agree. It gets simple stuff like that and make an appointment for yourself. It's in the calendar. You don't change it. And if you have to leave the office, go to Starbucks or go to some quiet place, just create a journal, right? And think about the business and what are the things that make sense to do, and what are even baby steps that you can engage in right away that's not too taxing on you. What are the things you're comfortable about business? What are the things you feel you're ignorant or don't really have a strong suit for, right? Write those things down, look at that, and then begin to put the puzzle together to how to make something more robust than it is today. It's truly a lot of fun. I mean, it's not a labor of a painful, laborious process. It's actually going to be a lot of fun to do that. So I would encourage every advisor, if they're not doing that, at least do some basic things like that for sure.
Couldn't agree more. Well, Craig, this has been awesome. I do have one, well, anytime I say one final question, that's usually not the final question, so I'm not gonna hold myself to that. But my next question is, we ask all of our guests about a book that's had an impact on them, and it's our way of distilling a reading list for our audience. And the book that you had made note of is a book that I'm a big fan of called Building a Story Brand by Donald Miller. Um, why'd you pick that book? What's the impact that it's had on you?
Yeah, the reason I picked that up, first of all, I was intrigued by the narrative or the book title, I should say. And I was familiar with Donald Miller. It's up in Nashville. I'm in Atlanta, and I heard him speak once. So I got his book, and you ever get a book that just like it's hitting every, I mean, it's hitting all the notes, man.
Hmm.
And you got a highlighter, and it's like you find yourself like, I'm highlighting the whole page, so just put the highlighter down, right? Because everything is so valuable, so informative, so in some cases counterintuitive. And this idea that making the client the hero in a story. So the power of story, which we all know how powerful story is. And he uses a lot of metaphors for Hollywood and so forth, and how to write a great story, a great ending, and the fact that you need a unlikely hero, and you need a villain, and the components of story. But the idea of making the client the hero, and you being the guide, the Yoda to if you will, to who was the guy in Star Wars, the original Star Wars. Uh, Help me out
Luke,
here, David.
Luke
Yeah,
Scott.
Luke. Thank you,
Okay,
thank
I
you.
was
Luke
gonna say I'm not a Star
Skywalker.
Wars fan, but I know
Yeah,
Luke Skywalker.
yeah. So here was a guy that had the power. He had the drive. He didn't have the commitment. He didn't have the confidence. And you're bringing this guy in that gave him great advice and counsel. And it was Yoda wasn't the hero. It was really Luke Skywalker. Putting the client in that realm and all the things you can do, the narrative in your messaging, how you can change the narrative on your website to really position the client as the hero of the story is absolutely fascinating. And I read it a couple years ago. I'm now listening to it on audio, and I got to tell you, I'm responding the same way. So I would highly encourage any of your readers, if they're not familiar with that book, I promise you will get some powerful nuggets that you can deploy in your business right away, and things that you may not be thinking about.
And what I like about it too is it's very actionable at the end of some of the chapters. It's like,
Yes,
hey, fill this out, do this thing. So you're not just like reading a book, looking around, being like, all right, now what? Like do
right.
the things that the book has you do.
That's
So
right.
I couldn't agree more. But Craig, like I said, this has been awesome. If I'm intrigued, if I'm curious to know more about you, more about True, uh, didn't even try the rhyme there, but that worked out well. Where can I go? Where can I connect with you?
Yep. So our website is true at true-ind for trueindependence.com. So TRU, no E, -ind.com. You can reach me at Craig.Butler at true. Andy at .com or tru-ind.com. And love to anybody who has a question, whether they work with us or not. I have a heart to help people and give guidance. I do coaching for a lot of advisors. So just have a heart to help people and love to field a phone call or an email. Feel free to reach out. Glad to respond.
Awesome. Well, Craig, I appreciate your time. Thanks for joining, and for everyone tuning in to this episode. Appreciate your time and attention, and we will catch you on the next one.